So Michel, you're finishing a book of photography, capturing the world of finance. Can you tell me a little bit about this book, Money and Life?
Okay, all right. Yes, I have a passion for photography, and it's been going for many, many years. And one of my friends, a photographer, told me once, well, you are incredibly lucky because you're inside the world, a world which we cannot enter. If we make a cold call and call George Soros or whoever, we will just, you know, don't get any attention. You are inside, so you can give us some pictures from the inside, and that's how the project started. The idea is to, with this book, is to, both through photography and text, it's a combination of both, bring the reader into the world of mystery, and this is why I focused on many of these hedge fund managers that are known to be quite secretive. And
what were the highlights in the book?
Well, I have about 25 portraits of the big names, but not just the big names. There are the George Soros, John Paulson, Alan Greenspan, Warren Buffett, Jim Rogers, and the likes.
And Michel, you mentioned John Paulson.
Right.
Here's a picture of him.
That's
so
him.
Can you tell me a bit about him, why you want to take his picture, and also about his use of credit default swap? Right,
right. John Paulson is a fantastic person in that he's a very shy, introvert person. When he was asked to give his take on the subprime crisis in the U.S., he went to Congress and he started speaking, and he spoke so softly that many times people were checking whether the microphones was working. You know, he's very always wears dark suits, dark ties. He is a multi-billionaire, but he takes a bus to his office in Manhattan. So and he's very, you know, does not go out, does not make any fuss. So he's a very quiet person, and he had one great idea in his life, and the whole point I make in his book about is his idée de génie. You know, he had one genius idea, is to, he was convinced that there was a problem with the real estate market, and this subprime mess was going to burst at some point. Many people, quite a few people had this idea as well, but where John Paulson made the difference is that he found out how to play this idea without losing money before it burst. Because when you identify a bubble, the idea is to go short, right? But if you go short and the stocks keep moving up, creeping up, your debt increases, and the more and the weight of your mistake increases as well. So John Paulson identified a new means to go short this subprime bubble by using CDS. And the beauty of CDS, these credit default swaps, which he was the first to use in this specific segment of the real estate market, is that you know what you're going to lose in the first place. You just pay the premium and then you just wait. So you know what your losses are, as opposed to when you go short, you borrow the stock, and if the stock goes up, keeps going up before it bursts, then your weight increases, so your losses can go to infinity. And this is why many people that did the same as John Paulson thought that there was a problem with the real estate market in the US, and went short those names that provide mortgage, like Countrywide Financials and banks like that, Bank One. They went burst because the stock kept creeping up, and at some point they just had to throw in the towel.
And Michel, let's move on to some of the pictures from your book.
Right.
This is of a fund manager. Can you tell me more about it and why you wanted to take his picture?
Okay. Well, I like his shoes first. You can recognize he's Italian by the fact that he wears dark suits and brown shoes. And second characteristics of many people from South, he calls his mom. This is 8 a.m. in the morning, and he's calling his mom. Mm-hmm. And I speak Italian because I grew up in Italy, and so I heard that he was actually telling his mom what to do with her money in terms of savings. and he was telling her about giving a full explanation of a problem with the Italians' experience with Argentinian bonds back in the 90s. Because the Italians were used to double-digit returns with short-term bills. But then the euro came, and interest rates had to go down to German levels, 4%. And so that was the end of the easy money that people... So the Italians found an alternative in buying Argentinian bonds. And they were huge buyers of that. They were the second largest creditor after the US in the late 90s. And then Argentina defaulted, and so it was a meltdown. So this guy is explaining to his mom that she should not buy those kind of bonds because they can go burst.
Now let's look at the second picture.
Right.
And this lovely woman, she is now an opera singer in Geneva. Is that correct?
Yes, indeed. She's a friend of mine. She's Russian by origin, Larissa Rozanov. She was a hedge fund analyst in a private bank here in Geneva, and she decided to move out of the world of finance and go into the world of singing. I thought it would be interesting to bring in this book a person that had decided to leave the world of finance, and I thought it was interesting the reason she gave, and that she said, you never learn, and the more you can study for many, many years, when a crisis comes, you just are taken, more or less, depending on, sometimes you may avoid the meltdown and suffer less, but unlike in singing, where the more you learn, the better you are, in finance, you know, I feel like it's more or less, I've seen it, you know, and I want to move on to something new. So I thought it was interesting to bring her to this book for that.
Perfect, thank you. Let's move on to the third image.
Right.
This was taken in New York.
Yep.
Can you tell me why you took this picture?
Yes, this a guy I like very much. His name is Marvin Schwartz. He works at a company called Neuberger Berman in New York. This guy has been active in finance for more than 50 years. So he has been in this firm for more than 50 years. He started there when he was 19 years old, and now he's a partner at the firm. This guy has a passion for investing. You don't talk to him about retiring. He will just ignore your call. And he manages fund with a value approach, a bit like Warren Buffett. He actually has better results than Warren Buffett's with his funds. But he doesn't like publicity. I had to negotiate about my taking a picture and bringing him into this book because he's also quite shy and doesn't like to appear in the public.
Great, and let's move on to the next one. Mm-hmm. So this is the final image. What is going on in this picture, and what is he so angry about?
Oh, this is a bit of a photographer's trick, you know. He's not really angry. I just wanted him to act a bit and show strength. This guy, his name is Ralph Acampora. You probably know him, Ducascopy, because he's a specialist on charts. He's a chartist, and I was talking to him and said, Ralph, I have a very nice picture of you now. I was looking at the back of my camera and I realized I had a very nice picture, and then I said, okay, now I'm going to talk like the Americans. I say, Ralph, I have a fantastic picture of you, but now you need to give me something sexy if you want to be in my book, you know. So he started going on to say, okay, Michael, I'll go and I'll tell you about my fight. I've been fighting all my life for the recognition of the Chartered Market Technician degree. I thought, oh, is that sexy? And he kept talking like this, and I was a bit, oh God, I was taking notes and saying, oh my God, I don't know what I'm going to be able to write on this guy. And suddenly at one point he goes, oh, and in August 1998, the firm, the investment bank I was working for in New York hired a bodyguard for me. I said, a bodyguard? Why? What for, Ralph? What happened? He said, well, this guy, you must know, had written a book in 1995, and the book was called Dow 6000. And the Dow Jones was at less than 4,000. And we hit that target. And when he hit the target, he went down 10,000. And we were going there. So this guy is really a bull, was identified as a bull back in the 90s. And in August 1998, when there was the Russian crisis and then LTCM, he changed his mind and he turned cyclical bear. And that's when he started getting phone calls at his home, you know, threatening, you shouldn't do that, why are you doing this? You know, because he's a guru. And so he had to walk around in New York with a bodyguard. So I thought, I have my sexy story.
Great, thank you very much, Michel, for going through all these lovely images of your book and sharing your view on the Eurozone crisis.
Thank you.
And thank you for watching Dukascopy TV. If you enjoyed this interview, then stay tuned for more like it. But for now, goodbye.